I'm Pierre Daly, Managing Editor of AdvisorAnalyst.com. Joining me today is Ron Landry, Vice President of Canadian ETF Services at CIBC Mellon. Ron, thanks very much for joining us today.
Thanks for having me.
Now, Ron, you've been around the industry for 24 years now, 15 of which originally, in the beginning, was mutual funds, and for the last 9 years, you've been at CIBC Mellon running ETF services. Ron, CIBC Mellon now oversees 20 of 29 ETF issuers in Canada. From your vantage point as head of Canadian ETF Services, what are some of the interesting developments that you've seen taking place in the industry this past year?
Well, definitely a slower pace to the growth from an ETF provider standpoint. We just saw Scotia launch in June, making them the 29th provider to come to the market. We've seen Excel, Sun Life disappear, assuming to come back at some point. We saw Sphere get purchased by Evolve from that standpoint. So, definitely a slower pace than last year. Last year we had 10 new providers come into the market. That said, I think in the next few quarters we'll probably see another 4 to 6 providers come into the space. I don't think we'll see as many startups per se, but definitely new providers from an ETF perspective coming into this space. We're at 70 launched so far this year, a little ahead of last year.
And that's a huge number.
Yeah, and we have about 10 that have closed down. Some of it's around Excel and Sphere, but we've seen some closures occur, some rationalization that is happening in the market. We're sitting at 614 ETFs in the market today, so it's a large number. So I think over the coming months and probably years, you'll start seeing firms starting to rationalize their product line, and then we'll see providers coming in and adding product. I don't think we have a cap on the number of providers that we'll see. I think it'll just be a different makeup of providers coming.
Right. It's really hard to know what's coming. It's still very early in the industry in terms of both the size and the breadth.
Yeah, it's amazing. I think we're in our 28th year of ETFs being in Canada, but really the growth has only been significant from a provider standpoint in the last 5 years. So, I don't see that necessarily stopping in the near future. I think there's still some runway for more providers to come into the space, and how they come into the space will be yet to be determined, but definitely more runway there to see more providers, and whether they're coming in from other jurisdictions like the U.S. or they're existing asset managers that are looking to get into the space. I definitely think they're coming. So we can probably see another 10 overall for 2018, and I don't see that really changing going forward until we get to critical mass. I don't think we're there yet.
So you're seeing a lot of new product launches for example, in the active ETFs?
We are. Active ETFs are probably the biggest growth spot right now for us that we're seeing. Between that and smart beta, but we're seeing a lot of ETF series being added to active product. I think the market can only handle so many passive index type products, and now it's moved into a more active space. If you look at the drive towards being able to deliver yield or income to investors, actively managed fixed income products are the perfect vehicle for that. You're starting to see actively managed preferred market or preferred ETFs as well. And in order to deliver those type of returns or yields or income to investors, you need an active mandate in order to do that.
So as you said, there's been a lot of interesting products brought to market, such as different marijuana funds, active and passive. This last year, there's been a number of blockchain-related ETFs that have been brought to market. Other than the sort of hot sectors, which are some of the more obvious product launches, what have been some of the more interesting active strategies or active ETF funds that you've seen coming to market?
I think it's more around existing retail mutual funds that are looking to
Right.
get into the ETF space.
Like some of the large mutual
The
fund
large
companies
mutual
that
funds, yeah. So we've seen Arrow obviously come into the space. We've had Brompton come into the space. We have other large asset managers, whether it's TD, AGF, whatever, who decide to launch a standalone ETF product. But I think, as firms get comfortable with how ETFs work, they will start to look at whether their product works as an ETF, and instead of having two separate distinct products, they'll try to marry the two together. They already have an asset base, they already have an investor base. Adding an ETF series just makes it so much easier for them to continue to grow assets and attract investors who may not look at the
Right.
mutual fund space as a viable investment tool.
it's giving their existing fund investors an opportunity to move
Correct.
within the under the umbrella of the fund company to
Correct.
enact a new active ETF within the family.
And and you also have a subset of investors who may never buy mutual funds. They're buying it through ETF products, and they like ETF products. And in order to attract those investors, you need to have that solution available to them.